Hey everyone, I'd like to get right into it. I am trading gold on the 5-minute chart every morning at 6 a.m. Pacific Standard Time. So make sure you adjust your time to align with whatever time zone you are in. So that way you are trading at 6 a.m. Pacific Standard Time, which is basically the New York session. I don't want to waste any time in any of these videos. Just like I wouldn't want anyone to be wasting any of my time with unnecessary information. So I like to get right into it. So basically the method is real simple. I use no indicators at all. And the main thing I'm looking for is the market to create and break a previous high or low right after 6 a.m. Very simple. I always trade a 1-to-1 ratio and adjust as needed if we're aiming for, say, a 1-to-2 ratio profit. Um, so I'm going to show you 2 weeks example. They are July 17th all the way to July 27th. I'm basically going to break down each trade, explaining how I got in and out of the market for each trade. Following this video, I'll be posting at the end of each week, pretty much the previous week, with all of the markups explaining how I approached each trade for each day, basically. So like a summary of each week. All my videos are going to be super quick. It's really not too much that I feel you need to know, with the strategy being very simple. I do offer a Telegram signal group for anyone who is just struggling to understand it and just consistently losing money. I know what it feels like, so I do offer a Telegram's group to basically take the same trades that I'm taking every day for the most part. Very simple. So enough said. I like to go ahead and get right into it. Again, I'm trading gold on the 5-minute chart, and I'm starting on July 17th for the example. So here we go. So first things first, first thing I'm looking for is previous structure. I'm looking for a low and a high. The previous low and high was actually up here. So we're going to mark that here. And our previous low, we don't have any previous low happening. So we'll just put that down there because we're still waiting for some structure to happen in our 6 a.m. zone. So the green zone is my 6 a.m. zone basically. So that lets me know that the market is open. And now I should be looking for my entry, and my setup should be already ready to go. So we have our previous high. We don't have a previous low yet. So we're still waiting. And now the market is open. So we're looking for some structure. So boom, we have 2 candles here, 3 candles here. So we can go ahead and let us know that this is a strong low now, right? So now we have a previous high and we have a previous low. And now we are going to see what happens now. So now we have a previous high here. So we're going to move this down to put it there just like that. And so now we have our previous low, our previous high, and basically we are waiting for the market to let us know where it wants to go. So it can either go up from here just like that, or it can go down from here, and we're basically waiting to see what happens. So we have a breaking candle here, but it actually didn't close down, so we're still waiting. Okay, so we have a candle here, but in one of my rules, I do have a rule for 2 small candles, and there is a certain way that I trade on Mondays. So just to go to it real quick, I do have this as a reminder, 2 big candles. We do not trade on 2 big candles. Right, this is a big break of the market breaking, but the candle is too big, so we don't trade these breakouts. A too small candle, right? This is too small. It's kind of like just like the Goldilocks and the 3 Bears story, right? We want the just right candles, right? These are just right candles. They're nice breaks. They're not too big. They're not too small. It's very clear that it's a nice break, and we want to be buying or selling on these type of breaks here. Right? So going back to the chart. On Mondays, I have a very specific rule where I notice that Mondays can be very tricky sometimes and sneaky, so I always look for the second breakout. So this would be considered our first breakout, so we would not be taking this trade because today is Monday. So we're looking for the second breakout, so we're moving this, right? This is no longer our previous low. We're waiting for a new low to be created. Boom, so a new low was created with these 2 candles here happening, so we can go ahead and put that here just like that. And now we're waiting for the market to go in either direction. Now, if it breaks this high or breaks this low, we are entering into the market. And break, boom. So we have a break. It looks just like that just right candle, right? It looks just like this one almost, right? And so we're going back. We're going to our position. We're going for a buy. We're using our long position. We are going to put the stop loss a little bit below the previous low, always below the previous low, but just a little bit of room. Give yourself some room, because I notice the market can sometimes spike back down real quick, but doesn't necessarily mean that it's going that direction. So we're going to set this to a 1-to-1. I like this tool a lot, especially on gold, because on gold, if you double tap, you can see that you can add in your account size. You can put in what your risk is, and then it'll tell you your profit level, your stop loss level right here, your profit level. That way you can enter it into the trade, so that way you don't have to be watching the charts all day. So with a $50,000 account set for 1% each trade, I will my lot size will basically be a 0.61. So I like this because it always lets me know what my lot size is real quick. All I do is move the decimal place 2 places to the left, right? So if this was 161, the lot size would be 1.61, right? So since this is 61, my lot size for this trade is 0.61, and I'm aiming for a take profit of a 1-to-1, boom, with the stop loss being below the previous low, right? Simple, guys, very simple, right? Let it play through. And this is why sometimes it's very important to just set it and forget it, because you don't know how long the trade can take. We'd want them to be quick, but you never know how long they can take. But as long as the setup is there, you never have to worry, right? So boom, it hit TP1 right there, right? So if you'd be aiming for, say, TP2, and I always say, if you're doing this, aiming for TP2 or TP3, you always want to open 2 positions, right? The first position should always be collecting the 1% for the day. Always get your 1%, right? So if we have 2 positions that are open, the first trade will be closing right now, right? It hit TP1, and then the second trade, we would be moving, right? We would be going like this. We'd be going here to a TP2, just like that, TP2. And then we would move the stop loss to a break even. Very simple, guys. So if this came back down and touched our break even here, then we would just close that trade will automatically close at $0, and you would still have collected on that first trade your 1% for the day, which is important. You always want to make sure you secure the bag. Always secure the bag. So we can go ahead and see what's going on. So we are going into the next day now. Once you wake up, right, and it's about to be 6 a.m. again, and you see that the market, actually the market already closed. So it actually hit TP2 on this day right here, right before you woke up. So I was going to say right before the 6 a.m. Time, which is technically right over here in this area. So once you're waking up and it's like 5:30, 5:40, and you're looking at the market and the trade still hasn't closed in TP2, it's always best, I say, to just go ahead and close it where it's at, because you want to just go ahead and prepare yourself to get ready for your next position for this Tuesday day. So that way you're not too worried about this one and it's distracting you, and you want to, and especially if today is a sales day, you don't want to be selling the market while also still having this buy open. So it's best to just go ahead, close this position. But fortunately, at 4 in the morning, the market closed at a TP2. So you closed at a TP2 for this day. So the first trade closed at a TP1, securing you 1%, and then the second trade closed at TP2, securing you another 2%. So nice. So we can go ahead and delete that. We're on to the next day now. We can go ahead and delete everything, actually. And we are getting ready to start a new day now, right? So the market is about to open right now. We are marking our previous high and our previous low just here. And so we're looking, I have a thing called connecting wicks. The wicks will always tell you where your previous low and your previous high is. So over here, we don't have any previous highs happening, so these wicks don't mean anything. This is the highest high right now. Well, technically this wick is connecting to this wick. So this is our previous high. And then this wick is connecting us to these wicks over here, which is telling us that the previous low is actually this low right here, right? So instead of it being there, right, we can grab this and put it here, down there, because that is the most strongest previous low, this low right here, right? So now we're waiting for structure to happen as soon as the market opens, which will tell us that the market is either going up or it's going down. And so the market has broken this structure, but it broke the structure not in our green zone. I only trade in my green zone. So if the market broke the structure before, then I'm not trading this break because this trade is invalid for me, right? So we're moving this high, right? And we're moving it here, right? And we're seeing what's happening there. Boom. So we have a break, but it's a too small of a break candle. So we're going on to our next candle. We need a confirmation candle, and we have a not confirmation candle. So since it didn't give us the same color candle, confirmation candle, that is not a break for us. So we're waiting for a new structure to happen, right? So it gave us another red candle, so I can go ahead and put this as a previous high, and we have our previous low, which is now not here, but it is now here, right? That is our previous low with this structure happening here, and now we are waiting for a break to happen. Just like this, boom. It's very simple, guys. I use no indicators at all. I just use simple structure, right? So the market broke this previous low, but it is a very big candle. We don't trade big candles, right? No big candles, right? So we're waiting for structure. We're actually moving this back, right? Because that is no longer the low, and we're waiting for more structure. This technically isn't the low either because this is already passed. So we're basically waiting for a new low. So we have a big strong green candle coming up here, and we have another candle happen. So now we can go ahead and assume that this is now our new low. Boom, just like that. And now we are waiting for the structure to break again. Right. So this is what it looks like. We're just following the market. Simple structure, guys. Simple rules. We have a break right here, and we have a confirmation candle following that candle. So we can go ahead, enter our position, right, and our new previous, we're going to keep it there, previous low, right, and a 1-to-1. Don't let the position scare you guys. I know sometimes you're like, oh, that looks like a very big trade. The market can do miraculous things, trust me. It can do what it needs to do. Sometimes it might take a minute, but it will do what it needs to do as long as the trade setup is set, right? So we have our arrows, right, telling us, right, it broke the high, gave us a confirmation candle because this was too small, and now we just see how it goes. Boom, wow, look at that. And it actually shot straight past it in 3 candles, so 15 minutes. Nice, very quick. And then we would adjust this to a TP2, just like that, just for a TP2, and then we move the stop loss to break even. If you had 2 positions open and you're aiming for more, it's always okay to just aim for TP1 if you want, guys. So that's always okay. You never have to be too greedy. But if you want to aim for more, always move your stop loss to break even because you always want to secure and you don't always want to lose more than what you just basically just made. So it's pointless, right? So move it to break even, and we're aiming for TP2. And oof, it seemed like it barely touched it, but my arrow is not telling me that it touched, so it's looking very slim. Okay, so it looks like it's coming back down. It's looking very risky, but if it comes back down to break even, remember it's okay to close at $0 and you didn't lose anything because you already closed your first position at TP1. You secured your profit for the day. So we're coming into our next day. Right, so the market is about to open, right? So the market's open, and remember what I said, if you're still in a position in the next day, this is still in profit, by the way, right, for the second position. So at this point, right, the market is about to open. We'll see where it's at right before it opens, right? So you just woke up right now, and you're looking at it, you're saying, okay, well, you know, it's here. It's actually a lot higher, right? You're probably already still at you're past your TP1 still, almost still aiming for your TP2. So it's okay to go ahead and close your position now here with your, it's probably like a 1 point, you know, 1.4, 1.5, 1.6 or something right now where it's at. So you still closed with this day a 2%, 2.5% day, right? So it still was a good day. You're closing that position because you want to be ready for this new position that's about to open, right? You just woke up at 5:30, 5:40, and you want to get ready for the new position, right? So we close that position. We are deleting all the drawings and we're getting ready for the new day, right? So the market is about to open right now. The market's open, right? We should already have our previous now structure to see where we're at, right? So we have our previous low here. This connecting wick is telling us that this red candle is our strongest low, and we have this candle here telling us that this is our strongest high, right? So we're following the market. We're in the green zone now, and we're waiting for some type of break. And this is why it's very important to watch your connecting wicks, you guys, because if you had this here, you would have thought that this was a breaking candle and a confirmation candle. So you would have took a sell and it would have just completely went against you, right? So there's certain little rules that we have to pay attention to like that. So the connecting wicks are very important. Always connect your wicks to let you know where that strong zone is, right? See how it's responding perfectly on these? If we had your high here, you would have thought this was the confirmation candle, right? So you want to make sure your zones are very nice. They look nice. I'm just using 2 lines, you guys. It's very simple, right? And then boom, we have a breaking candle. And I actually went a little too fast. We can go back a candle because this is the breaking candle, right? It's that just right looking candle, right? Just right candle. So we're going to go ahead and enter our position. Boom, we're going for a sell. We're confident, right? We're trading like robots, guys. We're not letting our emotions or anything dictate this trade. We're simply just going off a structure, and we're always aiming for a 1-2-1, right? All right, so we'll go ahead and just let this play through. And the trade is still live, guys. It's still live until it hits stop loss. So, okay, and it hits stop loss. So today will be counted as a loss. So, right, we've been doing good so far, but we can't count every day to be a winner, right? We're not perfect. We only can trade off a structure. We do not move the market with our money. We just simply trade off of the structure. I believe that's called, we're the retail traders, right, or something like that. So don't be discouraged, right? You're going to have losses, but all we need is the wins to outweigh the losses. So you went off the structure. It made sense to you. You wouldn't have changed anything. You are simply going to now close your phone with the loss and wait for a new day, right? New day. So it's now Thursday, right? And we can go ahead and pause and delete everything because we don't need anything anymore in that. So we are going here and we are marking our previous zones, right? And we can kind of say this is a low right thing that's happening. So let's see. Yeah. So we go like this. So this is our previous low, right? And then we actually now have our previous high. Well, lets me know for a previous high and a previous low. I like to see at least 2 nice candles, typically, or 2 red, 2 green, basically. So once it hits the second candle, then I'm like, okay, the market is clearly making some type of structure, especially in the green zone because the market can move really fast in the New York session. So typically when it's breaking some type of zone in that session, you might be able to catch a really big move. So we have this as our previous, right? And it actually has now 4 candles. Oh, look at that. So it actually gave you 3 candles, confirming that this is nice, a nice little high. And then we have a nice little low right here because we have this action happening here. We have a breakage right here, right? The candle broke, right? It's that just right candle, right? Just right candle. So we are, oh, and that's actually in my notes. That's funny, huh? So I think that's actually the same trade that is here. So it's perfect. Created my own notes, so I can use as a study guide to make sure I'm always consistently reminding myself. And take notes, you guys. Always write things down. Make sure it makes sense to you, so that way you can really see yourself growing in this. So we are going, and boom, perfect. So 1-to-1, boom, and that's why it's always important to aim for a 1-to-1 in the market, you guys, because I can guarantee that the market will try to give you a 1-to-1 with a nice setup. It would always try to give you a 1-to-1, but I can't guarantee you anything past that. That's why we always would move our trade to a 1-to-2 if we have a second position that's open, right? Because if we had 2 trades open, the first position was closed at a 1-to-1, secured the bag for the day, and then now we're trying to aim for more without losing anything. So stop loss to break even, and if that hits the break even, okay, boom, so it closes at 0. We just made 1% for the day. We're happy. We're closing the phone, and we're coming back tomorrow. We don't care what happens in the market now. We are already happy that the market gave us a 1-to-1 for that day, and we are going on to the next day. It's very important to practice discipline, you guys. Discipline is very important. The strategy is so simple that if you can't get this, it's like there's something that you're not doing correct. As far as your mentally disciplined, your mental discipline is not fully there, or you just have an over leverage that you keep doing, or something going on. So this strategy is very simple. So that's why I know for me that I had to practice my discipline, take those losses, and not let those losses make me, not let those losses make me want to revenge trade, because the market can be very, very mean. It's not your friend. It's not your friend at all. It will take everything from you. Trust me. So take what you can get, your 1-to-1. If it hit the break even with the second trade, who cares? You got 1%. If you want that 1% to be bigger, have your account size be bigger, or if you want to do maybe 5%, then you do 5%, but make sure you know what you're risking, and make sure that your win ratio is bigger than your losses. That's what's most important. So you don't want to be trying, oh, I'm getting the hang of this, you know what, tomorrow I'm just going to go ahead and do 20%, and then you lose that trade, and that'd be that one trade that will destroy your account. You'd get very mad because you lost more than what you were supposed to. Your revenge trade. So it's not worth it, guys. Just take what the market could give you, move on to the next day. You're not going to get further if you continue to do the same thing that keeps holding you back. So take what the market gives you. It gave you a 1-to-1. We are on to the next day. It's Friday. My rule is I don't trade on Fridays, right? So Fridays can sometimes just be too crazy. Sometimes the trade will be there, but it's always best just to stay away from it, just because like this, it just sometimes can be a little crazy. So we don't want to be trading on days that could be 50-50. We want days that are going to allow our setup and our structure to really take place, right? So we are now on to Monday. Remember, the Monday rule is always trade the second position. So my Monday rule is to trade the second position, or the second breakout, basically. So market is open, or it's about to open, right? So we're going to be setting our previous, right? We have our connecting wicks telling us that this is the strongest low, our connecting wicks telling us that this is the strongest high. And so now the market is open now, right? So the market just opened. We're in our green zone, and now we're waiting for some type of market break so we can enter into the market. So simple, guys. I can't stress it enough. No indicators, no RSI, no Bollinger Bands. I tried all those methods. I did all those different strategies. Don't get me wrong, like, it's great. There's a lot of different ways to trade, but I wanted to make this as simple as possible, because it's just so much. There's so many ways to trade that it can be overwhelming for a trader. You try to learn everything, and then realize that you're just too overwhelmed with different strategies, different things working, that you're working with that are actually now working against you. So I tried to just get the most simplest strategy, figure out the perfect time, perfect method, the perfect way to trade this. It's very simple. As you can see, we just have our previous high, previous low. The market opened at 6 a.m. and now I'm just looking for a break, right? The market just broke right here, right? So that would be considered our first break, right? But we don't trade the first break on Mondays, right? We're waiting for a second break, right? So we can go ahead and move this down, right, until it gives us a new low. which is, oh wow, look at that, I put it on there perfectly. But actually the low would be considered right here. But let's see to make sure that this wick isn't connecting to anything, which it actually is, right? So it's connecting to this low, right? So it's trying to tell us that this is our strong low right now, right? It just shot there. And this is probably some news just happened or something right now on this day. But that's okay. So we're looking for our second position. We have this right here, so we're looking to see if this is a too big candle, right? Oh, no, right, never mind. So we're waiting for this to break, so scratch that. Moving on, so we're waiting to see structure. We actually can now move this down. This is telling us that our previous high is still here, right? This is telling us that this is the strongest high, and then this is still telling us that this is the strongest high. So we're still going to keep this here, right? This is why this is not going to be our previous high. This is still our previous high. We have the connecting wicks, wick, wick to wick, boom. So we have a tiny, tiny break, but clearly that was way too small, right? But we can go ahead and now adjust this to be our new low because it broke this low, right? And now we're waiting for structure. We're just waiting for structure. Okay, boom. So we have, let's see, perfect. So we have a new high that was just created right here, right? So this wick doesn't really reach up here yet, so we can go ahead and consider this our new high. And then we have this as our low that's being broken, but it's very small, so we would need a confirmation candle. Boom, we have a confirmation candle to let me know that this is now considered a zone for us to go. We would put our stop loss a little bit above the high, right? Give yourself some room for Monday. Now note that this is very risky only because the market has been dropping already the whole session. So sometimes when I see this happen, I get a little nervous. But like I said, we trade with our robotic intentions and not our feelings and emotions. So regardless of how I feel about this trade, I still would take this position because it has broken the structure and it is the second break for that happened on this day, right? It's above our previous high. We don't care that it already dropped that much. We are believing that it could drop even more. So let's see. And it's close to stop loss, but that's okay because we trade like robots and we set the stop loss already. We set the take profit. We know our trade size would have been 1.09 and we are just waiting to see what happens. And wow, look at that. See, you see why we don't trade off emotions, guys. I just showed you right there. We need to trade like robots, right? The market, the rule for Monday is look for the second position. It broke here. That's the first position, so we didn't trade it. This happened here, this wick, which let us know that this was our low, our strongest low. It broke here, but was very tiny. We needed a confirmation candle. It didn't give it to us. It came here. It broke that zone, gave us a confirmation candle. We took the position. It came, bounced all in our stop loss zone. But because we trade like robots and not with our emotions, we set our stop loss. We set our take profit. Oh, sorry, that's my alarm going off. We set our stop loss. We set our take profit. And we just forget it. We forget it, you guys. So it hit TP1 actually right here, which is where my arrow is telling me, right? This right here. It's telling me that my take profit hit right here. Boom. So we already know our TP1 hit. And if we want to close, sorry, let's go put this back. If we want to aim for a TP2, then we would move this down, right, clearly to a TP2. If we had two positions open, and we move this to a break even. Simple, guys. Very simple. That way you can set it and forget it, right? So if it came back, okay, so it hit break even, right? So the position closed at $0, and the first position that you closed already closed at your 1%. So you made your 1% for the day. So we're still winning, basically. We're still winning. We're still winning. So we're on to Tuesday now, right? The market is about to open, and we can go ahead and delete everything off the screen because we don't need it. and we are setting our new zones for the market that is opening, right? So we have our previous high that's over here, right? This wick is telling us that this is the strongest high, and this wick is also telling us, right? So we're paying attention to the market, and we are waiting to see what happens. Boom. So the market is now open, right? The market's open, and now we can clearly see that we have a new low here, right? Which is right here. This new low was created, and we actually now have our new high, which is right here. Boom. Right. So this high and these wicks don't really connect too far or too close to these, or they're not really touching. So we're not going to consider these the high. We're going to consider this the high. The wicks need to be a little longer for those to connect. So we have our high, our low. We have a breaking candle here, but we need a confirmation candle now, right? And not a confirmation candle, so this is no longer a valid entry, and we are now adjusting our low to a new low to see where our new low is going to be. So we need another green candle or red to show us that that is our new low. So we can go like that now. And boom, so we have a break here. Let's make sure that this is not a big candle. It's 57 to 60. So let's see, 57.70, 58.70, and then 59.70, which is right there, and then it's just a little bit. So it's just like a little over 20 pips. So we like this candle. The breakout is still a little too small, so we are going to need a confirmation candle, but we do like the size of this candle. So we have a confirmation candle, right? So we're going now off the confirmation candle. We're setting our stop loss a little bit below the previous low, and we are always aiming for a TP1, always. All right, so this can happen, guys, right? This can happen all the time. We have a quick loss, right? And this is actually, I'm glad this happened, because sometimes when this happens very quickly, which probably could have been some news happening, right? Then you can have a chance to look for a second opportunity. I like second opportunities because it's not over yet. We're still in our green zone, and the loss happened really quickly, right? So we're looking for our second opportunity, right? It's not over yet. Once you have 2 losses in the day, you call it a day, right? And if we had lost this trade and it was in our red zone or outside of the, like, in our black zone, like it's not even in session anymore, then we're no longer looking for a second position. But since this closed very quickly, it's still, you know, about 6:55, 7 a.m. News probably just happened, which is actually what I'm getting into. Looking at news, I know that it's not good to trade. There's a lot of ways to trade, but when news comes out with a lot of red folders or orange folders, it's best not to trade directly on that time, right? So at 5:30 on Wednesday, say this is in September, but we wouldn't be trading directly on news, right? At 5:30, there's news happening with red folders. We're not trading on that time, right? But regardless of what happens before and after news, as long as the structure is there, I believe that the trade should be just fine, right? So this loss, so now we're adjusting, right? We have our new low, which is actually down here, and we have our new high, which is technically here, right? So that's our new high, right? Because this wick is connecting to this one, right? And so now we're looking for a second opportunity. And if the market doesn't give you a second opportunity, then it is what it is. You know, you just got to take the loss for the day. So we can actually see that this is a previous low right here, right? These wicks aren't really touching this round. So we can go for our previous low right here, and we actually have structure breaking right here, right? And that actually looks pretty good to me, right? We have our just right candle, right? So it's looking pretty good to me. So I like it. I'm going in for a second opportunity, hoping that the market will give it to me this time. So we're going trading just like robots. We are not worried about anything. We are trading just like robots. Here we go. So let's see how this plays out. And close. All right, let's just play it through. So it looks like it's taking a while. Looks like Tuesday wants to play with a lot of people's emotions. Let's see where we're at. Oh yeah, it's playing with a lot of people's emotions. And there it is, guys. There it goes right there, right? So our second opportunity was able to let us break even for the day, right? So we lost the first trade, but since we waited out, we waited for structure, right? We had our new low here. We have our high being that was here, right? Let us know with this wick here, right? We waited for structure to be broken. The structure was broken. We went in for only a one-to-one, always a one-to-one. Our lot size would have been 0.91, right? So we always know that we're not over risking anything. And if you ever want to change your risk percent to know that you're trading the correct lot size, just change the percent here. Just change the percent. You want to risk 2%, 4%, 10%, whatever your account size lets you risk, then by all means, as long as you are consistently staying profitable, then yeah, it's fine. Just make sure that you are staying within your risk percentage. I always like to trade 1 to 2%, but different accounts require different trades. Say you have $100 and you trying to flip $100, but you don't want to make 1%. It's only $1, right? So typically for a $100 account, you might risk maybe 5 to 10%. Maybe for each trade, you're trying to get between $10 to $15. So the ratio would change. But if you want to know what your correct lot size is, and I haven't tried this on any other pairs, but I know for gold, all you have to do is set it in this, and then it'll tell you right here, move your decimal places 2 place over to the left. So this would my lot size for a $50,000 account for 1% will be 0.91. Boom, TP1 hit here, and we are now break even for that day. So we are still in the money, right? And then the market is about to open, and at this point, right, say the night before, right, you're about to go to sleep and you're like, it's still taking a little too long. I don't want to risk it. So I'm going to close both positions at TP1 basically. So right before you go to bed, you're like, I don't want to risk waiting for TP2 if it was to hit while I was asleep, TP1 while I was asleep. So I'm going to set I'm going to take TP1 for both trades basically and set the number in there so they both can close once it hits TP1. And so you can wake up and now it's a new day, and you didn't have to worry about that. So there's different ways you can approach it, or you can be on the risk side, right? Let it hit TP1, wait till you wake up, see where it's at, and decide at that time. So say where are we at right now? 2 a.m. So at 5 o'clock, right? You just woke up, 5:30ish, right? 5:15, 5:20. This is where the market's at, and you can decide, okay, well, maybe I want to aim for a 1 to 2. But actually, ironically, look at that. It actually hit a 1 to 2 at 4 o'clock in the morning, right? So it still went to a TP2 day. So not only did you recover a loss, but you also ended in profit. But like I said, if you wanted to play the safe card, you can also just aim for just TP1 for a break even, and close both trades at TP1, just so that way while you're asleep and you're afraid that the market could reverse as soon as it hits TP1, and you don't want to be asleep when it's reversing, going back to break even, and you just want to collect the profits because of that loss, then by all means, do what you feel, but always try to aim for a 1-to-1. Always aim for a 1-to-1. I know the market can give us a 1-to-1, always, right? So moving on, we're on Wednesday. We have, I'm sorry, I shouldn't have said that. We have 2 days left, and then we are going to call it a day, right? So just starting off, right, we can go ahead and delete everything off and set our new zones, right? So before the market had opened, right, we have these as our zone, right? So this is our previous low, previous high. We have the market actually breaking. As soon as the market opened at 6 a.m., it broke this low. But this candle clearly can see is a too big of a candle that is breaking, right? So the candle's breaking, it's too big. So we are going to wait on this candle, right? And we're going to wait for more structure so we can move this down, because we're waiting for a new low to be made. And oh wow, what if it bounces right off of my, oh no, okay. So we're waiting for a new low to be made, basically. And boom, we have a new low that was just created right there, right? We have two candles going in the opposite direction. Actually now 3 candles going in the opposite direction, making it even stronger, right? And so now we have our zones of where we can anticipate the market will go once it breaks those zones. And now we're just waiting. Boom. So we have now a new previous high. So we're moving the line down. Boom. And now we are waiting for this to happen. We're just following the market, guys. Boom. So we have a breaking candle, and but it looks like we needed a confirmation candle, but the confirmation candle failed. So we're moving this now down to our new low. Well, this isn't our new low yet. We need actually one more candle. Okay, cool. So this is now considered our new low, and this is now considered our new high. Boom. And we now have a breaking candle here, and it's here, but it is a little too small, so we do need a confirmation candle. And it is a confirmation candle. There it is, guys. So right there, we're going in, and I actually like these type of trades. Sometimes they're a lot stronger, just because I see what I see is a W pattern here going on here. So I like to think of W's as winners. So we're expecting basically for a nice little W to happen, and it'll be nice that it can come all the way up here. So it can make us a nice little W. If you can see it, pretty sure you can see it. Right, doop, 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 doop. Right, for winner. Right. So that's what we're expecting, but we basically are trading as a robot. Right, it broke the structure, confirmation candle, below our previous low for a 1-to-1, lot size 0.97. Here we go. And wow, so it nearly touched it. Wow, look at that, very, very close. But if you set it and forget it, and it didn't touch the TP yet, then it didn't touch the TP yet. So we are still waiting until it touches, and there it goes, just like that. So this is when emotions become involved, because a lot of people will see this happen, and then they'll reject, and they'll be like, oh man, I should have just, oh, what the heck, I could have just closed it myself, you know. But with discipline, you're waiting for it to close, and it did here. It actually eventually came all the way up to where it needed to go and closed you in the right amount of dollars that you were supposed to get. So don't be discouraged. Like I said, if it's really tough for you to watch your charts, then just set it and forget it. Just set your TP, set your stop loss, and forget it, right? So we're at TP1. Now all the traders that are aiming for TP2, you set it for a 2-to-1. You move the stop loss to break even for your second trade, and that way you can stay in profit for the day. I'm going to go ahead and let it play through. So it went to break even, right? So we collected our 1% for the day, and we called it a day, right? The second trade went to break even, so you close with 1% for the day, and now we're moving on, and the day is over, right? Be sure to stay disciplined, guys. I can't express it enough. When you take what the market can give you and just call it a day. Just call it a day. Real simple, guys. The strategy is so simple. I'm not using any indicators, no Bollinger Bands, no RSIs. You know, I've seen all the videos. I tried all the strategies, and don't get me wrong. Like I said, there is a lot of great ways to trade, but for me personally, I needed this to be as simple as I can get it. You know what I'm saying? So take it as you must. I'm not saying that this is the only strategy that will do you justice, but this strategy has worked well for me. It involves no indicators. It's very simple, and I believe that you guys are more than capable of learning this strategy, right? So we have the highs being ready, right? We're still waiting technically for the market to open, so these are actually not even valid. So we can go ahead and delete these because the market is now all the way down here before the market opened. And now the market is open. So we're pretty much waiting for structure right now since the market moves so far away. And so we can see actually right here that we do have some mini structure that's happening right here. It is very risky just because it looks kind of like it's still part of a trend, but technically because of these two rejection candles and how this candle is right now, I consider this a zone that seems to have some pretty good rejection going on. So we can consider that this is a low. So if we get another red candle, so no red candle, so it's not, there's no confirmation candle anyways. So we're still waiting for new structure to happen. So we can move this down since this candle broke this low, but it didn't give us a confirmation candle. So now we're waiting for a new low. So unfortunately, we would have missed that, but it is okay because we trade simply off a structure and we don't get discouraged when the market moves so far in a direction. No should've, could've, would'ves, those don't help a trader trading. It's just very bad for your mental growth to keep telling yourself that you should have did this, you could have did this, you would have did this. Just look at what the market is giving you, find the structure properly, and trade it like a robot. Like I said, this low happened, but it broke, and it didn't give us a confirmation candle. So yeah, all this happened, but I'm not discouraged because I'm going to just wait for the right structure to happen. There was no structure here. That was the right move. So now we have a low here and this low being created, right? And so now we have a breaking candle of that low, and we can go ahead and set our stop loss and set our 1-to-1. Always trade is off of structure, guys. We just trade off of structure, not off of emotions, not off of feelings, right? So we're aiming for a 1-to-1. Here we go. Okay, so pause. So this one actually was, yep, that's what I thought. So this one actually closed as a loser. So today for Thursday, we would have finished this with a loss. Now, since this is technically now in our red zone, which is actually brings me here. So let me go back a little bit. So now that we're in our red zone, right, we can still technically look for our second position, but realize that this position could be more risky because we are in our red zone. Now, on Tuesdays through Thursdays, I always like to look for a second position. On Mondays, if I lose the first position that I took, I call it a day. Mondays can be sneaky and tricky sometimes. It's best to just call it a day. But Tuesday, Wednesday, and Thursday, I always look for a second position if I lost the first position that was a verifiable trade, right? So since this is a verifiable trade, right, this is the correct entry that I would have taken any day and it lost, I know that I can now look for my second position. And so it so happens that the second position happened right when the position closed, right? So we have our previous high here and it broke that zone. But if we actually look, let's make sure that the candle is not too big. So we're at 45.97. So let's say 46, right? Here's 47.50 and we're at 48 to 49. So this candle is actually a little considered, I would actually consider it too big actually. So this candle is actually too big, it's breaking. So we're waiting for structure to happen now in our red zone. However, the zone is going to become more risky, right? So we can delete this, right? Because we're not in our green zone. The green zone is the best zone, but in our red zone, it gets a little more risky. So let's see if it gives us a position. So this is actually right. So this is now considered our nice high because we have two red candles following this green candle. This is our high and we have our low, which is right here. Boom, just like that. And so now we are out of session, right? So we're in the black zone now, but it is not safe to take a trade anymore. And this is when discipline comes in handy, guys, because we are out of our zone. So a lot of traders are going to be like, you know what? I don't like that I just lost this trade after seeing all of that happen and I could have got in here. Yeah, you could have, should have, would have, but you didn't because the structure was not properly there. And so you can't go back and start doubting yourself like, oh, well, I took the trade here but lost. And then or took the trade here and lost. So, you know, don't be discouraged. Just stay mentally strong. We don't trade on Fridays. Don't say, oh, well, since I lost Thursday, I need to go and trade on Friday. No, you got to stay disciplined. We don't trade Fridays. You lost on Thursday. The session, it's out of session now. There's no point in looking for a trade anymore. Just call it a day and go again on Monday. You might win Monday. You could win all next week. All next week you could get TP2s, you know. So all I can say is that discipline is very important, guys. My method is very, very simple. I'm going to be posting, like I said, weekly, my previous weekly analysis, basically, of how I approached each trade for that week, so that way you can compare to, and use as a study guide. And you can also use the videos that I post in my shorts as well. So my shorts will basically be posted every day, showing you basically what trade I sent out in my Telegram chat and what trade I basically took for myself as well. So that's all for today, guys. Like I said, I'll get into other details depending on how the trade played out for the week when I post the weekly trade analysis and everything. So go ahead and share this video. Make sure you give it a like. Be sure to rewatch it as many times as you need to really understand. It's very simple. Like I said, I just followed the market, look for the break of the previous high, the previous low, and I trade accordingly. And that's that. So in these 2 weeks, I believe we won about, is that 6 trades, and we lost 2. And then some of those trades was a take profit 2 trade. So either way, at the ending of these 2 weeks, we ended out very profitable. And that's what matters. You want to end profitable and find a strategy that works best for you. I found my strategy to be very simple. And this is the only video that will probably be ever this long, because I did go over 2 weeks. It's just me trying to really explain to you how this method works. And hope that you can really take something from this. Like I said, I use no indicators, no RSIs, no none of that. I just use simple horizontal lines, and that's how simple I always want my trading to be. And that's how simple I want your trading to be. So be sure to subscribe so that way you can always stay up to date with the videos coming out. And yeah, I hope that you guys all eventually reach your goal of where you want to be in your life. And I'm wishing you guys the best.